Stocks inched upward on Friday with the Nasdaq unfazed by the slide in Apple, but this only after officials hinted the Federal Reserve could hold off from hiking interest rates at its meeting in September. But that still wasn't enough, as all three indices ended the week with losses. Comments by several Fed officials appeared to signal further rate hikes may be on hold. The optimism was supported by Federal Reserve Bank of New York President John Williams saying on Thursday that U.S. monetary policy is in a good place. And so, apparently, we're in a good place and everything is awesome, with the U.S. household debt standing at about $17.06 trillion, credit card balances rising to about $1.03 trillion, mortgage balances at about $12.01 trillion, and student loans at about $1.57 trillion. But not in a good place is Apple. Chinese curbs on the use of the iPhone by government officials and inside state companies sent Apple shares tumbling this week, wiping out about $200 billion of the stock's market value. Ouch! Before we take a look at the S&P, let's take here a quick look at Apple Inc., AAPL. I don't hold any shares. Now, the previous high at that point there, you can see we topped out and came on down. We bottomed at this point here. Nice recovery and exceeded the previous high up to this point here. But since then, it's not been too nice for Apple. We've come on down here, 178.18, roughly similar to the previous high. As we looked, say, a week or two ago at the S&P had the previous high and we're approaching that level, and I'm seeing a bit of consternation in the move on up. It's a bit hesitant to move on forward. So that could be trouble for the S&P. We see some trouble here with Apple. Will that carry into other stocks? I don't know at this point in time, but watch out for that. Okay, let's now go to the S&P chart. And so we're now looking at the 6-month daily chart on the spiders, the SPY, and you can see on Friday the close was 445.52. Now the previous high, at least in this chart here, 6-month chart again, was there. We rolled over, came on down here. We had, say, a little double dip here, and we made our way on up, back up through the 50 and the 20 EMAs, but we've come back down past the 20 EMA and we bounced off of that 50 EMA. So what I'm looking for is perhaps a bottoming and basing in this area here with a move back on up. So contrary to the monthly chart, the daily chart looks a little bit better. The monthly chart looks a bit scary. You have to keep an eye out for that. Down here into volume looks fine, and then here into the MAC you can see that we had this bottom here, the move with the fast line up and through the slow line, and even up and through the zero line. So it's gained some strength. It's not really all that strong, but we're near that zero line to slightly above. And I'm looking at this move here in the fast line. It seems to be relatively shallow. So there's a possibility we could just come on down and then skip off of the slow line and head on up, or it actually may come through. It doesn't really matter. It doesn't look too significantly negative to me. I would imagine a bottoming, basing in this area here, and on up we go. Here into the histogram, definite bottom and basing there. This is a pretty good slide on down, but I think we don't have too much further on the downside. I think that's the probability. It's going to be next week, week after, before we really start moving on up. But I think that's where the trend is heading. We don't have too much trouble out there. The price rate of change, again, nice bottoming and basing, and it looks like it's continuing on up regardless of the price chart. that zero line, so it's gaining some strength. And here into the relative strength index itself, it's at a moderate 48.80, right near that 50 or midline. We have a little sawtooth at this point here, nothing significant. I still see improvement in the chart there. Into the stochastics as well as the Williams, they're very similar. We came down here, bounced off of that 50 or midline. I think we may do some sawtoothing down here. We might go under that 50 or midline before we head back up, but I don't think it's significantly negative. Back on up to the price chart, another look. So I think the short to mid term, and mostly the midterm, is more upside for the charts. But again, keep your eye on the long-term 20-year monthly chart, because we could be heading into some headwinds that could provide some resistance. So just keep an eye out. Right now, I am still on the sideline. I'm not doing any buying, but I certainly am doing a lot of searching for the right stock. And so for today, that's ChewDog Charts. Thank you.